You could pass any firm with this trade, guys. It can be Mind Funded Futures, it could be Apex Trader Funding, it could be Perdia, it could be Take Profit Trader, it could be Top Step, it could be, Flip Flop, Bing Bang, Instant Win Money Firm, Fast Track Trading, which, is instant funding, right? You can instantly just get a payout with whatever it is. There are so many options out there today, guys. And the best way to pass a firm and make money is just trading well. I'm going to show you a trade that would have netted you about 400 points. I took this trade while I was actually on the road. I was at a buddy of mine's wedding having a good time. I took a quick look at the market because I do TA every night on the macro. And I was able to get in on a couple M&Q and just ride this for a couple hundred points. Now, if I was at my desk, I would have taken the same trade with a little bit higher leverage, made more money, but I still made pretty good money overall. So for those of you new here, my name is Forrest. I invest in stuff. I'm a day trader. I was a 7-figure trader before props even became a thing. And now I also trade futures with prop firms and teach people how to trade as well. If you're looking for a trading home, check out my Discord. The name of the Discord is Trade Edge, because we're all about trading the edges of the market and giving you edge in the market. We have a 7-day free trial, so go ahead, hop on down. The link is down below in the description of this video. First things first, let's take a look at the charts and take a look at the daily setup. All right, so we have TradingView open right here. For those of you who are familiar with TradingView, it's just a charting tool. You can do this on the charting tool of your choice. I prefer to use TradingView. So we have, I went back to Thursday, September 5th, right? We're concerned with the Friday. So first things first, some very simple pattern analysis. And I'm going to blow your mind how simple this setup actually was, right? So we had a green to red pattern coming up here on NQ. I trade NQ and ES most of the time. I trade other things as well. That played out, and then we had a breakdown in price action. First breakdown in price action was right here, Thursday, August 29th. Okay, we went green, but we had a big old top wick. That top wick got engulfed, went to the top of the channel, and we had a big red bar come in. Okay, this first red bar coming in was the first signal that something was up, right? Whenever we have a change in structure, I just look to the left on the chart, try to figure out what was the most similar move. Now, down here, at the beginning of this up move, we had a pretty similarly sized move. I'm not even going to measure this, and we can kind of just see at a glance how they're similarly sized, but I'll go ahead and measure the length of this candle. I'll use the old measuring tool, and we can see that they're pretty dang close. So what happened after we had this big green engulfing bar? Well, we had a green doji and another green doji, and then we had another big engulfing move. So you can see here what's interesting is that we had a big red candle, then we had a doji on the daily and a doji on the daily. Right here, like alarm bells should be going off in your brain, because this is the setup, right? Simple pattern recognition, guys. When you go on YouTube, there are all these traders out here. You got to do, the ICT, AJK, LMNOP, bottom wick full value, shoot a 3 trade. But what if you just looked at the market and did some simple pattern recognition? So we see, again, daily, green, doji, green, red, doji. So I'm immediately expecting a red candle, and that's exactly what we got. So let's go ahead and use the replay, and you can see that we had this big move down here, and you can see what my previous target was. We punctured through it just a little bit. So I was looking for 18,400. You can see that the actual move went to 335. So we punctured through it just a little bit, which is great. So let's add a few other things. So let's actually go back even further. This was some overnight trade that I took today. A nice little up move here. Actually today, reaction to this, which was, something else we could talk about. But let's go back to this day here, right? So we had the first move, right? Did not have the thesis at this point. At this point in time, your critical hat should be on, like, okay, I see something close. At this point, again, right, you can imagine that maybe you were hands off in the market, right? Maybe you missed this big down move, which is fine. I have a philosophy in the market that the market moves in waves. It's not my philosophy, right? A lot of people think that. Market moves in waves. So we had the first wave. Maybe you missed it. That's fine. You have to know another wave is coming. That's the most important part. If you miss a move in the market, another one is coming. Another one is coming, right? So what can we do? Well, we can see that we had this. At this point, I can just do a few simple measurements. So how can we figure out how far we want to go? Well, we're going to use the visible range volume profile for this. It doesn't work in the replay. So we'll exit replay mode, and I'll turn it on, and we're going to see that where we went is actually the other side of this shelf, right? So you can see that I marked this. I just lined this up with what made sense at the time. So we have this node here, let me get my brush tool. So we have this node right about here, right? Okay, so I just lined it up the other side of the node. For those of you that don't know, I trade the auction. I'm an auction theory trader. So while this was a technical based kind of light bulb, I need to look at the auction to figure out what matters, right? So the order of analysis is what prices matter, how do we get there, right? So this node I'd already identified. Okay, now we have a way to get there. The way to get there is the big candle, doji, doji, big candle. Okay, so I'm just measuring to the other side of the node, and that's the trade. And that's how I was able to slap it on with really just, what took just a few minutes of analysis. Now, what's so cool about this is when we zoom in to the 15, I have a few videos talking about prior POC trades. And this is really going to blow your mind. So let's take a look at how we could have gotten in on this trade on Friday and how mind-blowingly simple it actually was. Okay, we're back. We're looking at the market. It is the morning of Friday. Okay, we have the previous POC here at 9:36. I'll go ahead and do an option J so we can get a line here. Well, let's label it as the prior session POC. Now, if you're not familiar with my previous POC trades, I actually have a video on it. It's one of the two primary setups that I trade, meaning inversion trades and prior POC trades. These are money printers. It'll allow you to pass literally any account in just about one trade if you lever up on these. Now, manage your risk as you will. This is not financial advice, blah, blah. But let's see what happens once we go to this liquidity target. Now, the point of control is just a statistical line in a volume profile histogram. The volume profile that shows us where people had participated in the market. Now, if you follow auction theory, it's really easy to theorize what might happen when we get to prices that are important in the auction. And we know that what prices are important in the auction based off the volume profile. If a lot of people bought a Toyota at 100K and the prices of Toyotas get back to 100K, those people might want to do something about having a Toyota, right? Either selling it, flat, or maybe the prices of the Toyota goes up to 110. And it's like, well, hey, I didn't expect to make money on my Toyota, so now I'm going to sell it, right? So these prices are just where most people participated. So we get to the place where most people participated, market starts rounding over a little bit, big drop off. Okay, now at this point, you need to think about where to manage your trade. If you were only looking at the session and you did not have that daily time frame hypothesis, you might be looking around here, but the best place is probably overnight lows. So overnight lows would be like your TP1, take profit level 1, right? Now, if you're just going for that first take profit, that's still going to give you a trade of, we'll just measure from the POC down to the overnight lows, 231 points. 231 points, guys. 231 points. A lot of you guys are talking about 7 or 8 ticks, which is crazy. You're ticking me off. A lot of you guys are bad. Trade for real, okay? Come down 231 points. But again, if you go to the 18,400 level, which is a much better theory based off of the daily, you can see that we had a pretty much straight shot down there. So we got some chop consolidation at the bottom, little continuation pattern came up, probably coming up under the 8. We'll add our 8 EMA on the 15. See that? Oh yeah, we push up under the 8 and we squeeze under it. So let's do a measurement from the POC when we would have entered down to here. This is a price range here to, we'll do the actual target that's on my chart that I use, 520 something points. What does it say? 527 points. That's more than what I said in the intro of this video. I forgot how much it was. It's 527 points. Crazy trade. So that was a nice way to go to a wedding for me. Now, there are some obvious questions. Forrest, is every single POC trade gonna be this big? Probably not. I can tell you for certain that they won't be. Again, this is a financial advice, but the market bobs and weaves. You don't need to catch every single trade, guys. You just need to catch the trades that are extremely easy to play and unpredictable. Now, in this trade, there was that big first wave, some consolidation, and then the big next wave. So if you missed the first wave and you were able to restrain your FOMO, that's fine. You should always expect when there's a big move that there's another similarly sized move coming. That's why things like bull flags work so well with measured moves, right? We literally just had an impulse in the market, consolidation, which we, like to put a pretty picture around, called a flag. And then we have another move, right? That's all that it is. And what's really powerful about this is that it doesn't matter if you're trading your own account, you could be trading a prop account, you could be trading, can't trade other people's accounts, right? You're trading sim. It doesn't matter what you're trading or even which prop firm you're trading, right? This trade works, right? Even if you have to wait till RTH, there was no, data implications here in the way, right? Even if you look half of this move, that's still 250 points and some change, right? Most of these firms, you would pass. Even firms like Apex that have the trailing drawdown, you still pass because there wasn't that much of a pullback. And it all starts with doing that higher time frame analysis first. It just requires practice. Within practice, daily activity, you can find trades just as big. Now, you should be very clear from looking at the chart that these trades don't exist every single day. You can't not expect find trades this large every single day, but that's fine, all right? Your P&L as a trader can't be like a straight line, right? It's going to be this jagged up curve, right? That's how it should be if you are trading appropriately, right? As you learn and become a better trader, you'll start to leverage up, make more and more money, okay? If you want help with this, you can join my Discord. I've been trading for a pretty long time now. I have a coaching program that I'm wrapping up my first round of students. They all proved very well. Super excited and proud of all of them. For those of you who are in my coaching program who are watching this, I'm proud of all of you. You're all doing great. And yeah, I just want to share my passion of trading with as many people as you can. So come on over to the Trade Edge trading community, and I'll see you in the next video. Peace.